Well, good evening, all. I'm Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up is for the evening, as we're here now, on the 25th of April, Thursday, 2024. What a day and what an aftermarket. If you saw the aftermarket, Intel didn't do well, missed and down about 5%. Snap was up 24%. Google was up, the Alphabet was up about 14%. So you've carried the futures to higher levels. As I told you, you had 78 companies reporting this week. So you've got another host of them in the morning, and wow, it's going to be crazy. The big boy's waiting for May, and that's NVIDIA, but what a day. So Amazon, they took all the way down to 166, and it did well. On the weekly charts, it still looks bullish. It came back. NVIDIA had itself a heck of a day here. It was up $30. Tesla gained another 8, so the believers in that are right on top of that market. It's funny because I'm reading today a story about UPS and FedEx, and they're having trouble in California. They can't get the big trucks being made. They're electric trucks. So Amazon was pretty smart, I guess, to wrap up Rivian to give them, 100,000 trucks. And that's working out because when you read about California, they can't get them. And there's mandates where they're supposed to get them. There's all kinds of issues. This is going to have to be addressed in a big way. It's a very limited market, a lot of startups in it. They come and go. And that's been the problem that you have there. Copper market. All of a sudden, takeover business is happening. BHP going after Anglo American, $39 billion bid. Can you believe that? And that's probably not high enough. So this gets real interesting again. Now, today we had, as you know, the first quarter GDP. It's an old number, so let's understand that. The best way to understand this number is add up and divide by 3, so you get some numbers here in the last numbers. You got to smooth it in different ways. But my take on the number, and I'm going to stick with my take, is that inflation is sticky. High interest rates, restrictive ones, are starting to wobble what the consumer, what businesses are doing. And businesses, if you go back to the Beige Book, are having troubles for the first time passing on cost increases. So we're seeing wobbling in part. There's still growth, but it's wobbling now. Inflation sticky. Tomorrow, we get a big number. Tomorrow, we're going to get the PCE, income spending, and the price index. I always look at the price index. That's the favorites of the Fed for some reason, one of their favorite indicators, they claim. So they look at it hard. Well, with all that's come in, I can't imagine it's going to come out weak. It could. I looked at the probability table, and I put it in tonight's full newsletter for my clients. September is still in play for a lot of traders at the Fed watch page, what the swaps are saying when the first rate cut might come. I think in order to get there, you've got to immediately start showing that the jobs report for the month of April, May, and June really weakens. Moderation won't do the job. If you saw today's unemployment claims, they're dropping. They're not going up, they're dropping. People are finding jobs if they want them. Now, look at the weather. It's about to change right now. We're going to go in the Midwest into the 70s and 80s. This cold spell's over. You'll get this out east very shortly, too. And I looked at the 10-day forecast. We're constantly in this high 60s to high 70 range. So spring is definitely here. It's May, and it's bringing with it the warmer weather. Well, that helps all the outdoor things. The kids will be out of school. There'll be more jobs. Outdoor cafes in the Midwest opening everywhere shortly. Just think of all that's about to happen. And that, to me, isn't the time that you lose jobs. It's generally still a good time. Construction, all those type of things. And then we have migrants coming, and as they leave the shelters, I live in a sanctuary city. So when they leave, they got to go somewhere. They don't have family, friends, they got to go. So the state gives them X amount. Somebody's paying rent for somewhere. That's not getting rid of Shelter costs. I don't see how we get these shelter costs down when you have all these people in here taking up those properties. Yeah, the high ends can fall in certain areas, and you're seeing rock and roll happening. Are you looking at Austin, Texas? What's happened to their real estate values of homes? They're down about 18% from the peak just recently. So there are shifts taking place. There's always, but bubbles, or when things run up so fast, they inevitably pull back. I lived in South Florida. You think I didn't see that happening? I had a second home there. And all the time you go through it. All right. So as we take a look at eBay, I'm liking the action. I wish the earnings would come out on it, but I find this sideways action right now trying to set itself up. The trend is up in terms of the swing line. Now, I created swing lines. I had mentioned this in my other report, but I'll just tell you. I have a son. When he was 13 and he's near 40 now, I told him, I said, you can go with a room with any of my friends. We'd be pouring over charts at home, whatever we do, and walk up to him and say, I can tell you what the trend of that is. And he would draw this swing line and he'd go, it's up. And the trend's up until you take out this number. And then we talk about where moving averages were, where's the resistance? And it carried through. Well, I put this as a formula in my charts years ago. It's a stalwart of what I use, all right? The trend is up. I look at bias by where the market's in relation to the 18-day average. It's fighting for bias, but tonight on the close, it's up. The buyers are in control until this number's taken out. If the market rallies, a potential number's the upper band, and it breaks the uptrend if you take out the low right here at the 50 level. So you can start coming up with a game plan. And then I look at momentum. Momentum often leads price, and it's pointing to the upside. It's that simple. So game plans start coming up. Now, I do this on weekly charts too, and I make them, I like when they match up. I don't want to find the weekly charts in a downtrend, the daily charts in an uptrend. Oftentimes in the stock market, that gets you into trouble. At least that's what I believe. In Tesla, all he had to do is say, you know what, his followers, I'm going to build that low price car. Boom. You had an embedded reading that you lost. If you've taken my course, you learn all this. And if it loses it, I'm looking for the 18-day average. It happened to all do it in one day with a huge gap in the chart. It's not normal. But obviously, when Musk has an earnings report and he says things, his followers, you know the loyalty that they have for his brand, and it's immense. So up and away you went here. Now he's got to deliver the car. So we'll see, we'll all be watching. In the gasoline trust, the market ended its downtrend to me when it hit the lower Bollinger Band. It didn't throw out a buy signal, but that was the short cover. And this is the resistance zone. The trend is still down, lower highs, lower lows, but the fact that it closed over the 18-day average says, when the market's over that, the bias is up. So you got trend down, bias up. Don't want to do anything. I like when the two converge. In XLF, the financial services, you got a lower low, a higher high, and a battleground at the 18-day average. Think of the 18-day average. The red line is your line in the sand. When the market prices are over it, you have a bullish bias, under it, bearish. And if you hit an extreme, it often likes to go back and fight at it. You came down in the Bollinger Band. You finally got your vertical move. Look how it's fighting there again. Charts like to get to a neutral zone and work from there. They don't always have to do it, but you'll see over and over. Example, you came down. Look where the resistance point has been, right at that 18-day average of closes. Momentum here, though, is no longer locked into the downside. The market has no trend. It turns bullish on a close over 123.24, but other than that, I don't have a sell signal. In FCX, Freeport. It's interesting that copper's not making the move, and it's all about bidding for the companies that are making the copper. The market corrected. I told you I expected that when you lost the bullish embedded reading here. It ended up first fighting its battle right here at the 18-day average, and when it gave ground and you hit a Bollinger Band, I teach you Why is that number so important? Well, I'll just give you a little bit because you should take the course. 95% of the time, the market's going to trade within the bands. So you want to be the hero, though it's out of the band, it's going to keep going. You will get a home run or two in the course of a year. And you will strike out more times than you can even imagine. You'll be embarrassed of it. Why? Because the algorithm says 95% of the time the market will trade within the bands. And the first time you hit a band, because it's not with momentum locked in one way or the other, be very careful. And I teach you how to figure that out. In RSPD, well, you just lost the bearish embedded reading. Here it is. When these numbers are locked in like that, very bearish. But as soon as the red line closes over 21, the odds favor it's going to get to the closest moving average. In this case, it's right here. It is the 100. It would be neat to get to the 18, but it doesn't have to. It's at the first objective. It went right to that average. In XHB, all right. So what are the home builders looking at? They're obviously looking at, what are interest rates going to do? Mortgages climbed again. I wrote about it in my full research, and I put it all in this morning as to where they're at. So you're over 7% in a lot of these mortgages. The builders, some of them can buy them down. Pulte was talking, I think they're at 5.7. So that's how they can buy them down. They've done it in a certain way. Somebody's paying for it somewhere. Just understand that. But higher high, lower low, no longer embedded. You made your run to the 18-day average. It's waiting for something new to trade off of. In the energy sector, I got another buy signal today with the close over the 18-day average. So until the market takes out 93.72, my work says you might be headed up to the upper band, and the battleground's going to be this 18-day average of closes. In the gold market, I think any close over 216.72 could lift the market if the momentum here and that red line start shifting to the upside. I hate when you point down here and you can get a buy signal there. They're not in sync together. Silver, still in a downtrend, but oversold. I consider any reading in the slow stochastic under 30 oversold. Copper market, copper itself fighting its battle. So it's the titans going at each other, because the simple fact is the next cycle, when we cut all these interest rates, and I say we, the world banks, central banks start cutting rates off the restrictive policy to spur on their economies. Europe's going to be there very shortly. What will happen is those that need metals and other materials will be buying them, as the whole idea of cutting interest rates is to spur growth, demand, and that's the next step that will come. So I think copper is a big play for that. TLT, well, I'm not in the bull camp. You heard me say that. I think the Fed is higher for longer. I will not be surprised to see that we don't get any form of a cut this year, or if you get one, it'll be after the election. You have to get some really weak reports now to make me believe something else. All right, so I need at least for the months of April, May, and June, weakness in a row. That would do it. Then I think that I'd want to be looking and saying, the Fed's going to leave the data and it's going to get ahead of the curve. But you get another strong report right now for jobs next Friday and tomorrow's PCE. You keep pushing it into the future if it's going to weaken. UUP in the dollar, correction time. You lost the bullish embedded reading. Remember when I told you yesterday that the futures had already lost it? Now it's catching up to it. If I'm right, the market will get down to the 18-day average and try to fight for support there right now. FXE, I was expecting a run to the 18-day average. You lost your bearish embedded reading. You got it, kaboom. So we put this together, I write about all this, and you can get access to the things we offer on our free offering page. Especially if you're new and you haven't tried anything, this is the way to go. It's at iraepstein.com. This is only part of it. The page drops way down. You check off the blue of anything you want, and then at the bottom of the page, you put in your name and your email address, and it automatically comes to us. We get it to you typically within a business day or two. So Also, you can get there by moving your cursor to the top here. And when you move your cursor to the top, what happens there is you'll see an icon, click it, it'll take you right to that page. So iraepstein.com, go to free offers or move your cursor here. I'll catch you all in the morning when we discuss how the PCE numbers came out and the reaction to it. Take care.